All right, good morning, everybody. How is everybody doing on this fantastic Thursday morning? Russia invades Ukraine and sends the markets tumbling over the Asian session. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. What is up? Good morning, everybody. So you can see here that US oil is just breaking out, skyrocketing. You're hitting almost into the $100 region on this asset. Over here on my right, you can see the S&P 500 taking out our bearish targets that we had at the beginning of the week. Oh my goodness, let's get off of this one. I want the other one. Let's go over here real quick just so we can discuss this. There is a trade setup that I took over the week, or at sometime in the middle of the week. We'll discuss that as well a little bit. But you can see right here, this is when the weekly open. This is this week's range. You can see that you have not been able to close a daily candle above the open. That is extremely, extremely weak. Yesterday on the S&P, or the SPX, I should say, this index right here, you can see that price traded straight up into that weekly open and then dropped like a rock. So that's what we're looking at currently. That yesterday's when we took out those that target. So pretty much there's no other target on the table for right now. You can see that, by taking out that target, you took out a few swing lows. You just took out this swing low with today's candle. So, this isn't good, right? This isn't good. This is pretty much what you would expect in uncertain times as we have currently. Let's go over here to Bitcoin real fast so we can get a little bit of an idea as to what's going on here. All right, so let's pull it out. You can see that we are testing daily support. Boom. I posted this on Twitter the day that it happened. When we closed above resistance, I basically said this close right here, if you take out the low of it, then you will have a bull trap on your hands and you can look for lower markets. And that's exactly what's happened since. Yesterday, fantastic entry on an hourly Heath level. That was a supply zone right here. Is that baby? Let me get it on the chart. For some reason, it is not on there anymore. Right there. Held price here when it traded up into it. Retest, come back in, test it again, and fell. And this was overnight during the Asian session. That is a pretty big drop. You are testing that daily support, but it's more than that. It is monthly support. Now, this is the thing. You got the monthly close in 4 days and 14 hours. You will also have the 2-week close as well. And since, right here's your 2-week Heath level, not really been paying too much attention to this since we traded into it the first time. But you can clearly see that now you are below 2-week support. There wasn't really anything to look at on the 2-week time frame in last Saturday's upload. Really isn't right now either. Everything you can find is on the weekly and monthly charts. So going back out here to the monthly chart, you can absolutely see that support zone is your line in the sand, essentially, to hit all the way back down into last year's lows, 2021, that big bullish candle. Yep, this right here is the low of that candle. And you can see how it is underneath these 3 swing lows right here. So if we do get that monthly close, unfortunately, I would have to assume that the target would be the yearly lows. And that comes in around $27,678 on Coinbase's data feed. Now, I am not saying that I expect that to happen in a week. I am simply saying that in 4 days, if you close below this support zone, then it looks extremely weak. And we will be looking for any bullish rallies to get sold into. But that's what we've been talking about since the bear market started, and it started months ago. All right, this is your all-time high, and it probably is going to be your all-time high for a couple years, at least until we get some kind of bullish stuff going on, and when we have the next halving, which will be the 4th halving in Bitcoin's history. So that's when you're going to want to be looking to be a buyer on this asset. On this channel, we've been telling you guys to sell or at least protect your downside risk. Not really sell because I can't do that, but protect yourselves. There were so many things coming into the end of last year. This channel basically suffered from it because everybody was in the stages of hopium. We're going to, $250,000, $500,000 Bitcoin this year. We got this wave 2 thingamajigger going on. I mean, I don't know what all that analysis comes from, but I think a lot of it has to do with Glassnode and some of those analytic metrics that they use on that platform. And I'm telling you guys that everything you needed to know happened once you lost the bullish trend line from when we put in, or when the Fed instituted bullish monetary policies. So just by them switching that in itself was enough to say, okay, maybe we should take some profits. Now, obviously, I didn't sell any of my Bitcoin either because I'm accumulating. I only buy it. I sell it, but I'm doing it on an inverse swap contract, so that way I can accumulate more Bitcoin. All right, so moving on, we're testing daily support now. This is also a monthly support. Are we going to bounce from here? It's hard to say. Over here, this is the only news network that I can find that's actually discussing it right now. Right now, at the time of making this video, Russia has 12,240 tanks in Ukraine. They have already started attacking. You've gotten a few hundred helicopter attacks, few hundred airplane attacks. So I mean, they are physically attacking. So that is why we're seeing this pretty good size move to the downside on Bitcoin and other risk markets. Let's go over here to gold. Gold is obviously a risk off market. Last week on this channel, we were discussing this massive amount of volume that was thrown down on last week's candle. Here, I don't look at volume very often, so this was brought up to me from one of the members inside of the community, basically saying, "What do you take from this volume?" And when he showed me, I was like, "Geez, I don't know what to take from that because we haven't seen volumes like that since 2014. 2014 is the last time we've seen volume thrown down on gold like we've seen last week. You can see today is Thursday. Now you have your breakout. Last weekend, I basically said, that's a lot of buying volume. You did come up and take out weekly resistance. Next weekly resistance was this level over here. That's where we stalled out last week. You can see this week's making short work of that level. Big, strong breakout. This asset will close tomorrow, but you can see that there is just about the same amount of volumes being thrown down on this week too. Here is your all-time high on gold right here. So since August of 2020, when gold had that big, massive bullish rip, then it basically traded sideways to down for, well, since August 2020. And now you can see that you're finally getting that break. So last week's price action was epic. Once you got above this swing high right here, that's a breakout. That's a legit breakout, especially coming off the back of a weekly bear trap, big weekly bearish engulfing candle. So many people's getting short on this retest right here. And you can see when this candle trades up, it didn't quite get up there and then it rolled over. So that was basically cementing the short side of gold, and then boom. So a lot of this volume isn't only buying volume, it's also stops getting triggered as this big candle just blasted right through everybody's stop losses and then closed strong on the week. So yeah, that's what we got going on right now. When you see gold taking off like this, gold doesn't really move that much unless there's some serious stuff going on. You would think that with that size of a volume candle that you would see a much bigger candle in itself, but that's not really how that works. Volume in itself isn't what makes price move, so to speak. It just lets you know that there was a lot of transactions taking place in that week. So that is going to the moon. All right, let's go over here real quick to the Aussie yen, as there is a trade on that to speak of. Now, obviously, we were looking for pops to sell into, but last week, you could see for the last 3 weeks, this price action has been migrating up higher with closes above each week's open. So this week, when we opened, we were looking for a double top target to be taken out, and that was here. Wait a minute. Where was it? Where was it? Where was it? Was it on the smaller time frame charts? It was this one right here. All right, so this was the double top target that we were looking at when this had opened right here. So basically going into the intraday chart, I'll show you briefly what I was looking at. So this was my target. Once this area hit, that's when I started to take the profits off. We want to go over here to the open because the trade was actually taken during the Asian session, which is something I don't often do, but I felt very strongly about the trade. So this was the daily open. You can see that we traded above it and we were playing around with it right in through here. And that was my target up there. So I took entry on this level. This was my bullish entry based off of the daily open. Also based off, this hourly candle looking nice and strong, migrating away from the daily open. So that led me to believe that we could potentially see a bullish range expansion. This trade took 2 days to play out, but once it hit my target, I took profits basically because we were looking for everything to find a top. But when you pretty much know that the short side is going to continue and you want to sell into a rally, finding where to sell into that rally could be a difficult thing to do. So I kind of assumed that we would take out that double top. If we go back into the weekly chart, you can also see that it was nothing more than last week's high. Boom, take out last week's high, then roll over. You can see that we are back under the weekly open now. So is that an area to look to go short today? That's, it's potentially an area. All right, potentially an area. So we'll keep that on the chart right there. It's 82,500. If price bounces back up into that today, you could potentially see that roll over there. Well, not really, because you've already hit it like several times. So this might go a little bit higher. Guys, in times of extreme volatility, you're going to have big, massive bullish candles as well as big, massive bearish candles. So brace yourselves. Trading massive volatility is fun because you're not in a trade very long and your targets are basically hit and assets can move 100 pips in the inside of a daily range. You can see on the watch list over here, you're already a percent off on the daily range. So 1% is a big move in FX. And you can see over here, you got the pound yen up 1.18%, pound dollar almost at 1%, NZD yen one spot 31%. NZD, they hiked their interest rates, so they are on the table for that. Let's go over here real quick. You can see it looks essentially like the Aussie yen, only this has tested and rolled over, and it is looking for a continuation of that downside right now. Obviously, you don't want to short into a big bearish move like this. Last night, before the Asian session started, I basically was telling people to watch the daily levels here and here. Let's get this off and this off. So I basically said once we knew that we had a bear trap in the making, or once it basically revealed itself, I told everybody to watch either 82 spot 52 or 83 spot 191 for bearish entries, looking for this to continue. If we go back into the intraday time frame, you will see that entry was fantastic. I said that when this was going on. Very next hour, I didn't enter because I wasn't paying attention. Very next hour, you get that test. It was the Asian session, but remember, in very extreme volatility times, Asian session will provide trade opportunities. So yeah, you can see that test. That's what we call a Heath level on this channel. It is a daily supply zone. It was the most epic and fantastic entry to the short side for this extended downside move. That's already played out. So basically what you're going to have to do is you're going to have to wait for a daily resistance level to be situated. So you might not be able to take any short side entries on these assets this week. You're coming into support also on this asset, which you can see right here. Looking at the JXY charts, I don't really see much going on. Sorry, I just got distracted. I want to make sure people can hear me. That would suck. Go 30 minutes into the live stream on mute. Yeah. What was I just talking about? I messed myself up. Oh man, so exciting. Also yesterday the volatility futures closed in backwardation. We had $29.55 on the March contract. The April contract was at $28. So that means your near-term contract was more expensive than your next month contract, and that's volatility futures. Volatility is a product that can be traded inside of the equities as a way to hedge against your risk. So when you have backwardation like that, firms have to do something because typically, especially options market makers, they're typically the ones providing the quotes. So when you have backwardation, that means they're potentially losing money. So they have to make a scramble basically to hedge positions and this and that. So the volume, I mean, it's just getting started. Oh yeah, JXY. It's just getting started. If we go over here to the JXY chart, this chart, we've been looking for it to bounce since we started to see risk off in the market, or when we started to see these potential risk off concerns. And we were talking about it in October, guys. That's when I first started talking about watch out for risk, because the central bank is hinting that they're going to be looking for a rate hike. That was in October of last year. And then when they came out and physically said it in a press conference, that cemented it. So that right there was a risk off move, or potential risk off going to happen. And then now Russia, Ukraine, and then Canada, or shall we call it Canadistan, basically freezing people's money just because, well, they control the currency. That means they can freeze your bank accounts, guys. Anybody, if you just help them freezing your stuff. But anyways, here on the JXY, we've been looking for this asset to bottom out and then turn around with haste. Something like this. You see this massive gap up, big strong daily close. So over in this region is when we thought we were going to see a lot of that bearish momentum. But then you can see that price traded down lower, taking out anybody that tried to jump the gun. Now this asset opens at 8 a.m. Eastern Standard Time, because that's when the central banks start their trading. That's basically why we say 8 o'clock is the New York session open in FX, 9:30 is the stock market open. So, but the FX market open is 8. It trades 24/5, but you have 3 opens inside of that daily range. So today you're potentially going to see this thing gap up above that 87.28 level. So we're going to be looking for pullbacks, right? Because things don't just go one way. They always travel in waves, even in volatile times. And we will be looking to short rips on Bitcoin and pretty much any other risk asset that you want. Yesterday, Adam provided an opportunity as well. Let me go over here to it, and then I'll start answering some questions. Adam, let me go over here on KuCoin. Where are you at? There we go. Adam was basically not falling off like everything else was. So let's go down into the intraday charts here, right here. So yesterday I was looking at Adam on this candle right here. So Bitcoin had found that level and started to roll over. The reason why I was hesitant about taking the position, or the reason why I didn't mention taking the position, was because it physically wasn't at, I guess it was, but it didn't test it. So I was really hesitant, but I did go ahead and take a short position on this push higher here, because I was looking at it as a resistance test. Once this bullish candle was formed, that then becomes resistance until you get an hourly close above. And if you're going to see continuation or a rejection or a reversal, then those hourly resistance levels can be decent places to look for entries for short side targets. And then boom, it just unfolded yesterday in the evening. You can see the trade was really not doing anything or going anywhere. The asset's in a downtrend, obviously, so I wasn't really too concerned about it. But then, the Asian session fired off, and this thing is doing really, really good now. If we go back out to the daily time frame, you can see that you are getting really close to taking out these swing lows down here. So we'll see what happens. Atom is still pretty decently intact compared to some other crypto assets. You know, anytime you get Bitcoin off for about 40 or more percent, usually your other cryptocurrencies, or a lot of them, will be off in the 70s and 80%. You see Atom is just now, with this stab lower, hit 51% off. So basically what I'm saying is that's where you can find opportunities. When you have an asset that you pretty much know is going to follow suit with the rest of the market, then you want to find those assets that have more meat on the bone, so to speak. Like, I don't potentially want to look to short an asset that's off 88% from the all-time highs, because the move has already happened, right? At 88% off, that's when people start buying it again. So, but anything that's like 40% off and something else is 80% off, then there's potentially 40% there of meat left on the bone. So that's why I was looking at Atom. There's a few other cryptocurrencies that were looking okay. I mean, look at this. Look at this. This is red, and I mean red. I'm talking double digits red. Most of these assets. The other day when we were having a pretty bad day, you know, most of your crypto assets were off 2, 3, 4%, and you had a couple outliers that were off like 11, 12, and 13%. Everything is off in double digits almost. Everything. Double digits down. Big down days, guys. Big down days. All right, so what's on everybody's mind? What's on the chat's mind? Yeah, and also being bearish, warning people and stuff like that. That obviously that does hurt like any kind of audience retention, especially when you got perma bulls. You know, their numbers going to the sky because they only talk about bullish stuff. You got me over here, you know, talking about potential bearish things. That typically doesn't help one's following. But yeah, we're not really concerned about that anyways, because we're over here killing it. Good morning, Heath. Bought silver. Silver's pretty decent buy. Let's go look at it. It's not moving as strongly as gold is, but silver is going to be grouped in that same category as gold. You can see that you're finally getting over that swing high there on the daily. That level was there for potential resistance, but you know, with gold blasting through like that, you would not have been looking to short silver either. Silver is trading above a weekly swing high. That is also going to be weekly resistance, $25.31. There's a day and 12 hours left on this asset's weekly candle. So are you going to close above that or below it? It doesn't really matter. What matters is the move is happening, right? It's happening. So you do have a low down here. If you're looking to buy silver, then just do it a simple way. If you get a pullback from swing low to swing high, roughly, if you retrace down to 23.83, look for a potential buying opportunity there. I don't think you'll get a complete weekly retrace, but it's impossible to know what the market's going to do. Let me scroll back up to the top, make sure I don't forget anybody or any important questions. Good morning, good mornings. Good morning, bro. Legendary Heath. Wish all Ukrainians and Russian peace and health. Me too. Me too. I don't know why this is going on. I don't understand politics or geopolitics. I try to keep my nose out of politics because, yeah, those are things that people can't really communicate with one another easily. So I try to stay away from it. But I guess from what I can tell from the news, they just don't want them being part. Russia doesn't want the Ukraine to be part of NATO for whatever reason. And they are throwing a temper tantrum. And that does suck for the people that live in Ukraine, as it is going to be coming right through their front door. Terrible, terrible situation. Sitting in your house watching TV, if you still have electricity, that is, with a tank sitting on your front lawn. Not a very fun place to be. So hearts and prayers go out to everybody that's in Ukraine. And Russia as well, because they will be casualties on both sides. Good morning, good mornings. A lot of good mornings. My portfolio crying right now, says Powell H. Yours isn't the only one, my friend. Yours isn't the only one. Bitcoin is off almost 50% from its all-time highs. That means your portfolio was cut in half. Cut in half. That's why percentages are so important. So important. So Bitcoin's here. It doesn't even matter where you bought it. It does not even matter where you bought it, right? You can buy it anywhere. As of November let's call it November the 8th, your portfolio's been cut in half. In half. And you got bulltards out there still acting like this is still a bull market. I mean, when are they going to wait to call a bear market? When Bitcoin's already off 80%? Then they're going to be like, oh, now, yeah, it's a bear market now. Now's the time to buy for sure. Oh, man. Gotta love them. Gotta love them. Bless their little hearts. Good morning. Good mornings. A lot of good mornings. Sorry. Well, what are you apologizing for? You don't have to apologize in here, my friend. Remember, oil went negative. What a turn, says Danny B. Danny B, when I get my new machine and my new internet, I will use something where I can basically pop up your comment. Yes, I do want to speak on that a little bit. Bitcoin was not the trade of 2021. It was a fantastic one, but it wasn't the trade. The trade was oil at 1 cent. Oil at 1 cent. You're trading at $100 almost. So you can do the math on that. Big returnage on investment. Big numbers. That was your winner on 2021, 2022. When that pandemic happened in March 2020, oil was the thing to buy. Absolutely. And oil is going to be here forever and ever and ever. Oil is the lifeblood of this economy. Yeah, we're getting electric cars and stuff, but it's going to be a long time before you have more electric cars on the road than you do oil. Big rigs, how effective is an electric battery going to be in a truck that hauls 80,000 pounds, 3,000 miles one way, and then turns around and does it again? Will it get 1 million miles under its belt? It's hard to say. So how cost effective will they be than, just buying a regular diesel powered engine vehicle? That's one of those things, guys. I'm not political. I'm just simply saying oil isn't going anywhere for a very, very long time. Was the trade of the decade. How about buying Russian stocks right now? Sorry, business is business. Don't care about politics. Best regards, Matthias. I don't know anything about Russian stocks. I don't know the Russian stock market. I don't know any tickers. I just basically trade the U.S. equities and Forex and stuff like that. But yeah, I wouldn't be buying any of them right this second. You definitely want to buy some when you have, massive percentage points off, especially if they're like a Microsoft or an Apple, but over in Russia. You know what I'm saying? If you got companies like that, then yeah, wait for them to come off about, for 50 to 60% and then start buying them. Because it's very rare that you'll ever have a good company like your Microsoft and Apple's take a 60% fall and then stay there or head lower, right? It's typically never happened in the past. So when you start getting massive percentage points off of those assets, that's going to be the time to stack that portfolio up for sure. Absolutely. But give it a little while still, because this is just getting started. Just getting started. Check out RSX ETF for Russian stocks. All right, so I should have just read one more thing down, and you basically answered it. Yeah, they're coming off pretty good. So this looks almost identical to the S&P 500, just not as big. But this is a weekly time frame. This is your March 2020 pandemic. Yeah, this thing is coming off. 32 bucks and it's down to 19, so it's almost a 50% drop. Let's see what the actual number is. 43.67%. So the RSX, yeah, keep it on the watch. How old or young is this? Well, you can see that this asset doesn't look like this once I stretched it out. This little section of price did, but looks like the United States of America's companies are doing a lot better than Russian companies for whatever reason. But yeah, from this swing high, you're off pretty good amount, 47%. maybe just give it another week or two. Or if you want to start potentially buying now, then, I don't see what's wrong. This is the thing with volatility. We don't know how far it's going to go, right? When the pandemic started, it lasted very, very briefly before the U.S. government stepped in and put a backstop under it. But if that starts to happen again, then we may be in trouble because it's not really like the U.S. can do much now, especially when they're getting ready to hike rates. It's not like they're going to be able to keep doing it, because if they do, then inflation keeps running rampant, and that's the one thing that the U.S. cannot let happen is inflation. Inflation is the death of all assets. Inflation will crush this world or this economy. So they will hike even in this stuff going on here. But the move wasn't really that bad. Like SPX, the move's not that bad. I mean, it looks pretty bad, but it's not nearly as bad as this. If you remember, this was like the first week of the fall was massive. On that one weekly candle from the all-time high, you dropped almost 15%. So it's like right at 14% in 1 week's range. You just now hit 14%. And that's been 1, 2, 3, 4, 5, 6, 7, 8 weeks. See the difference? So yeah, there's risk out there, but it's not this kind of risk, right? It's not this. But yeah, some puts on the SPX paid off well. We bought them right at the very top. It was a fantastic thing. I closed it down already because I have a very short time span of trading. But, I mean, the very tip top. It's fantastic. But, yeah, you can keep your eyes on them. Good morning, guys. Good morning, Heath. Bought silver. Yep, read that. Awesome. Let's see here. The man says, Matthew Maisel, thank you, my friend. LOL, imagine. Says, bless up 33. I don't know what you're talking about, my friend. It could be just talking to someone else. USD, Turkish lira. Let's go look at it. It hasn't really been doing anything since the crash. We did have a little bit of a tradable event there, but yeah, it looks like the government's not going to be able to keep this under control. See, the reason I basically said to kind of chill out on it and wait is because if the government gets involved and is able to put a stop behind it, then it'll probably continue lower. But we'll see. Can this week be a bear trap? Absolutely, it can. Here is going to be weekly resistance on it. Being this high above it, though, yeah, we'll see what happens next week. If next week you have pretty big amounts of downside, then you're going to have probably more downside on this asset. But typically when it's doing bad, this thing goes up, right? Because the Turkish lira versus the US dollar is so terrible. So that's why it's going up, especially because you've got dollar strength right now. Let's go look at that real quick. Remember, we've been bullish on the dollar for a long time. It's been difficult trading because of the range that it's been in for so long. But I basically said as long as you stay above that 50% retracement and the 618 of last quarter's range, you're bullish, and there is that continuation to the upside. So pretty much everything that we've been talking about and getting everybody warned about for a long time is pretty much happening. I mean, like, it just is. Big, strong day on the dollar today. Big, massive move. Yeah, but it has been choppy outside of these outsized moves, right? This was a big move up after a pretty decent move down. Then you got this chop, trades all the way back down, and then, yeah, it's been a little bit difficult. But there's the breakout on it. We're expecting bullish continuation, right? We're bullish on the dollar because it got absolutely crushed. Yeah, absolutely crushed, and you're going back up. So hiking interest rates is good for the dollar, but I don't think inflation is. So it's one of those things where you basically have two macro events going on at the same time. You do have interest rates getting ready to be hiked, all because inflation is moving higher. But so just trade the charts, right? As long as the technicals say to be bullish, be bullish. And the technicals said to stay bullish since last year. We've been bullish on the dollar since last year. So we're going to continue to keep that bullish bias until we get below the 618 of last quarter's range. Moving up, guys. It's moving up. Hi, I'm here because I'm going to be in trouble soon. Up to the chin. Come to Heath when stuff hits the fan. Well, you probably should have been here before stuff hits the fan. That's typically when you want to be telling people to be warned, is before the bottom drops out of it, not after. That's when most of your people are going to start talking. Seeing one guy just now talking about gold this week. We were talking about gold last week. Not before it happened, but as it was happening. Yeah, I'm sorry to hear that. That sucks. It really, really does. Because I know a lot of people are hurting. And, I don't like to boast when I'm doing good when other people's hurting, but they can do good as well. We don't know what's going to happen in the markets, but we have very good levels that we can watch, and we can take trades in the direction of the near-term trend. But glad you're here nonetheless, my friend. Run up the likes. Heath is on fire. Thank you, Danny B, my friend. If you guys don't mind, smash them up. I can't see that really does anything, but it's awesome to see the support anyways. Can I ask what you expect for the New York Open in this week? Well, obviously I'm expecting this to continue. If a lot of people start dying, it's going to get really, really bad. Really, really bad. That's the thing. Like right now, we really don't want to be in a war. I mean, even with high inflation, you typically don't want to go into war. America is a warmongering country, unfortunately. I am an American, and I am a freedom-loving American, so you know what side of the aisle I sit on. However, facts are facts. This country's been in war since it got started, with a few periods of peace. You know what I mean? So I don't think Biden's going to go into that. I hope he doesn't, to be honest with you. I hope they just figure out a way to make it all stop. That's what they're supposed to do, right? That's what politicians are for. But typically they don't. If it continues, you're going to see more downside. Unfortunately, you can't sell the lows. I mean, even if you get a small bounce, you really can't do that, because just like in downside volatility, you can have upside volatility as well. Trust me, you will see rip your face off rallies in this downside stuff. So typically you want to look, if you're looking to get bearish, you want to wait for one of those rallies. Now, we didn't have a rip your face off rally on Bitcoin. I was kind of looking for that. We didn't get it though, right? It was just slow and lumbering, very, very slow. But you don't want to be caught in something like this, right? I mean, that's a massive move, pretty big rip. And it lasted for a couple days from swing low to swing high. You got, 10%. But that's a big move on the S&P 500 index. So you can get those rallies. We kind of already did that move. So like if you look at it like this impulse leg to the downside part one, then you're looking for that corrective phase, that retracement. You've already gotten that. And now you're seeing that downside continuation number two. And after two waves of continuation, I start to get really hesitant about looking for continuation. So your measured move would look something like this, right? So, I mean, obviously it's not exact, but if you get what I'm trying to say, that's the important part. So if I take this leg of price action and move it low, like say that, and then take this over here from the swing high, because that is your corrective phase, and then your second impulse leg. I'm not a wave counter, but you typically get your first downside move, your retracement, and then your second measured move to the downside. So this was the trade up in here. This was when you were looking for shorts, and we were all over it, looking for shorts, looking for longs, looking for shorts. We're day traders over here, so you know, we can take positions in both directions. But the simple trade was when I bought the puts after we strafed the all-time high. It's like a strafing run. You just get a little wick above that, and then boom, We bought them on the SPY. We bought 480 puts. And that would have been the trade, to just hold those puts. And when you're hedging a portfolio, you don't need to buy a bunch of them. You just need to buy a few, because of just a couple of those puts bought at the perfect time can hedge out your entire portfolio. So, I mean, that's typically when you're looking, like I said, now we're probably going to see a bounce, a rip your face off rally soon. Will it be today? I don't know. Tomorrow? I have no clue. But we will be watching important levels. The only level that you have currently to watch is you can look for that old bearish target for a retracement, or if it's a longer retracement that takes, a week or 2 or 3, then watch 4288. That'll be the first level to watch. It's going to be supply. So we'll see what happens there. The breakout was here. Even if you're a breakout trader or a breakdown trader, the breakdown was yesterday. So you would have been looking for a stutter step in the intraday charts to look to get short for that. But I don't like buying or selling breakouts or breakdowns, because they don't always work, or they don't work that often, I should say. But right now, there's really nothing to do. Even on some of like the Forex, what you want to do is you want to find assets that haven't moved so much, like pound CAD, for instance. You can see that, well, it's getting started now, but it's only down 0.25%. Maybe if you get a pullback on that intraday, you can look for short side entries. But it looks like the pullback's already occurred, and you're getting that continuation now. What was another one I was looking at? I think New Zealand CAD was one. I think New Zealand CAD. Well, no, it's moving lower now. Oh, no, you're not. So up here's your daily open on New Zealand CAD, so you can see that you are well off of the open. There was an hourly Heath level. Did not quite get a test of it. Now, this bullish engulfing looks nasty. And that happened because that's when they hiked rates. They hiked rates right here. So you get that, a pullback into demand, and then continuation. This is the selling event. So this is your one leg expansion, then your retracement, your corrective phase, and then your second expansion. You can see that's when the pros look to start taking their short side entries. Will this thing continue lower? I have no clue. You're below this support here right now currently, and then your next support level will be down in here. So if you are looking for a trade, you're going to be looking for like a spike up and then continuation lower. I don't know if you'll get a spike up to 86.038 or not. And the spread on this is it's not as terrible as some assets, but it is pretty bad. So something is happening. Starting to drop a few frames. But that's all right. So yeah, you want to look for your assets that are not off that much. Pound New Zealand is actually up on the day, but that's probably not going to hold. We'll see. Yeah, when you're looking for cross pairs like this, when you're not involving the USD, then it's just going to be whichever asset is stronger than the other is going to make it move. Any short entries on BTC in the horizon? Probably not. You're extended to the downside. You've been going down for 4 months. So straight down for 4 months. So you're probably going to see an up closing month pretty soon. That will probably be the time to look to sell Bitcoin when you get that up close month. You don't have to get an up close month, just like you don't have to get a down close month in a bullish market. You don't have to get an up close month in a bear market. For everybody saying, well, look at the size of this compared to that. This is on log. If you take off log, you can see that the size is roughly half. Roughly half. You've taken out half of the entire value of this asset. That's never good, ever. No matter what asset it is. When you lose 50% of its value, it's not good. So, short side entries, you had a good one on that push higher. Not so much on this one, but you get what I'm saying, right? You're going to want to wait for this thing to find support, let it get a bullish move to the upside, let it stop out some people. Then we'll look to add on to the big shorts. It's just since the downside move started, it's been a one-sided market with just a couple areas for short side entries, right? Could have been one there. This one, we were all over it. Some people didn't know what to make of this, and we said it's bearish continuation. So that was it. Then you had 1 week of downside, then a few weeks back up, stop you out, and you're rolling over. So the short side entry is pretty much extended. So I don't see any shorts anytime soon. Maybe, you just had a couple bullish weeks. So, that's typically when you're going to look to short a downside moving asset, is when you get, the week or monthly bullish close. I think Bitcoin does have serious chance of seeing some kind of inflows if banking problems, capital controls, and digital currencies, or even international tax I am bullish on Bitcoin long term. I think Bitcoin's going to be worth millions of dollars one day. But right now is the thing. If you're buying Bitcoin with an amount of money that you don't mind losing, that's exactly what you want to do. Then right now it's a buying opportunity. Because if it is going to be worth $1 million one day, then $30,000 Bitcoin is cheap Bitcoin. But right now, is it cheap Bitcoin? Right now, is it? That's what really matters to most retail, because they're constantly buying over leverage. They're using every dime they can because they're trying to get rich today. They're not trying to get rich by just simply buying and letting math work in their favor over the long term. They're not doing that. The smart money is, but retail isn't. They're trying to get rich. So I only buy Bitcoin. When I'm shorting it on the inverse swap contract. That's so that way, if I win my trades, I'm paid in Bitcoin. So I'm accumulating Bitcoin. I think it's going to be worth a lot more in the future. But I don't think you start to see a bullish move again until, the next halving. Because you started your bearish market phase. And those can last for over a year, right? And it's just now February 2022. Just now this downtrend started. So you're in for the long haul, right? We're in for the long haul. So, any spike up into the $50,000 regions will be met with heavy sell side pressure, in my opinion. And that's even if you get back up there. It's looking like it's having difficulty doing that. But that's what we were originally looking for. And then this wave of sell side, when we had this bullish impulse, we were looking for a yearly open test, right? And this was before it happened. We were discussing it before it happened. We were saying we got a target of the yearly opening range. We fell short of it right there, but once we get up into that second attempt to get back and go test that, failure. So that's what we were looking for. It ran short. So now you're shorting it into potential support, and a lot of it, monthly support to be exact. You got all this stuff down here too. That's even if you take out this wick low. I think this wick low will be taken out at some point. I don't know if it happens this week, but I do expect that low to be gone, because this is your yearly opening range. So end of the year, we were looking for this to roll over, and it did. The beginning of the year, we were looking for a retest up into the beginning of the year's open, and that's what we got, and you're seeing sell side continuation. So it's pretty much playing out exactly the way we were talking about it. But I understand positioning yourself to capture that is difficult with all the intraday stop runs and things like that. It's difficult. Trading's not easy. If it was, everybody would be rich. Heath, where can I find your Discord? I don't like talking about it a whole lot, but it's you can find it on Patreon. There's a link in the description. If you want, you might want to wait till the first of the month, because that's when Patreon does their billing. So if you sign up today or tomorrow, you're going to get billed again just in a few days. So wait till the end of the month, or wait till the beginning of next month, and then sign up if you want. It's not a signal service. I do talk about trades and post occasional trades and what I'm looking at and stuff, but it's not a signal service. I teach you how to fish. I want you to go catch the fish yourself. Thank you very much. You are welcome, my friend. Kevin212 says, great analysis, Heath. Thank you very much. Would you please take a look at Bitcoin on the 4 hour? Absolutely. 4 hours is a good time frame to watch Bitcoin, in my opinion. Keeps you out of a lot of the intraday chop. You can see that level is getting punctured. See this, when you have a move like that, that pretty much like officializes the move. Because that's the level, that's support, that's the level that you're looking for. You got to bounce there. Price trades away from it. Then when it comes back intact to the level, you got more volume to push it through, essentially. So when you have a level around the midpoint of a candle, then that's a decent level to watch for retests as well. If price were to come back in there and check it, could potentially see it roll over there. It looks like you tried to do it this morning, but without success. Let's see what it looks like. I don't look at the RSI on anything lower than the daily, but you can see that you're overbought on the 4 hour. You're probably, which we had a death cross as far as with the moving averages. We had a death cross on Bitcoin on the daily chart, and that pop in price was just to get back up to around the 200 exponential moving average, and that's when the sell side came right back into the. So I mean, potentially, if you were just been watching the death cross alone, which is the 200 exponential and the 50 exponential, when that crosses the purple line on this chart and the green line, when that crosses, price is always down away from it, but you can wait for price to pop back up. And let me explain it on the daily real quick. So you can see it here. So when the actual death cross occurred here, right here is when it actually occurred, right? So that's on January the 11th is when you had your confirmed death cross, and then this price trades back up into close to the 200 exponential moving average, and then the sell side resumes. So I mean, that's just because of the death cross, potentially. When you have an asset that's got a death cross on the daily, it's typically bearish. You're well below your 200 exponential moving average. You're in a bear market, right? That's pretty much what people look for. Go out here to the weekly, you can see that you're breaking down below the 100 right now, and your 20 is catching your 50, which means soon, if you keep going lower, you're going to see that cross, and it's not really good. If you go to the monthly, you can basically take off everything and just look at the smaller ones, like the 2 or the 20, like that, the 21 exponential, and basically you can just look at how what's happened, right, in the past. So once you got below it here, that was pretty much close to the end of the bear market. Once again, you went below it and closed below it on the March 2020 stuff. Yeah, last month you tested it. This month it looks like it wants to break down. There's 4 days left on this month. 4 days, guys. There's monthly support. 4 days you will close either above or below this level. If you close above, then you can look for another bounce to short. Close below, same thing, pretty much. Look for a bounce to short. It's bad. I hate to laugh, but it is what it is. We've been all over it. This thing's been extraordinarily weak since the end of last year. Thank you very much, Heath. You are welcome, Oliver. Great analysis. All right, got that. I got to go, but thank you, Heath. Yeah, I got to wrap it up, too, as well. At 6:30 is usually when I want to kill these things, because I want to look for assets, look for potential trade entries. It's been, a little bit slow in the FX world for the last few weeks, but I think we're going to see things open up here pretty soon. So it's going to be fantastic. We're going to absolutely be keeping these things rolling. But look for potential short side entries on the Aussie yen that's a good one to watch for short side entries because you're just getting started with it, right? Just getting started with it. You're still green on the month on that asset. If you roll over here, though, and look, there's your daily. So you're just now starting to roll over. So now we'll watch for this thing to come back up into the range a bit, and we'll find an area to look for short side entries on this, because this will be a good play if you do have continued downside weakness. All right, guys, with that being said, if you have any questions at all, make sure you just drop them in the comments section. Benjamin says, thanks, Heath. I got lulled into the Moon Boy psych, but this was my first market cycle, learning a lot from you. Yeah, it's easy to happen, man. It happens to everybody. It happened to me. I fell into it. Once it happened, though, the second time I was like, yeah, I'm not falling for that again. Over here is when I was basically saying I fell right into that Moon Boy bull crap too, talking about blah, blah, blah. Wyckoff, this ain't going to happen. Probably not. And it did, right? So, yeah, I don't do that anymore. But this was a perfect, time to tell everybody to sell. When you made this move right there, that was, and if you would have sold up there, you'd have sold around $50,000, which, $69,000 is the high on this. So not bad. It's a lot better than selling at 35 or worse, 30 or 20, right? But yeah, it's probably going to head lower. I know there's a big trend line under here also that, people are looking at. I understand it's there. It's here. This is what they're looking at. So every Moon Boy in the world is looking for this to hold support. And if it finds support, remember, it's from the monthly support more than it is that damn trend line. Trend lines are subjective. Horizontal price levels are not. It's also daily support. Perfect daily support. But yeah, they're going to look for that to find a bounce because Bitcoin's in a long-term big range when in reality it's in a bear market. So, all right, y'all have a fantastic day. If you got any questions, post them in the comment section. I will answer them. Yeah, and that's it. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading.